record to the cloud. And then I just wondered if by doing that,
I've got a message. I've got a message that says got it. So I'll just say got it.
Oh, that's good.
Yeah, same with me.
Ah,
So it's recording now.
So why not just leave the recording on?
Yeah.
so down the bottom of your screen, Craig, have you got the pause/stop recording, the two buttons?
No, I don't.
Do you have the record button still? No.
But it is recording. So what we could do is just keep it recording and then
6:30, but right. So we've got recording in progress.
Cool, yeah.
I'm just wondering whether I think it's time to start. There are fewer people on screen than had registered, but that's pretty well normal. So look. Hello, everyone. Welcome to the second in our the Southern Cross Postgraduate Association's webinar series on managing your financial well-being. My name's Craig Wilson. I run our postgrad helpline. Before we get started, please let us all acknowledge the traditional custodians of all the different lands upon which this webinar is being held. Let's acknowledge the elders past, present, and emerging. Let's acknowledge that our first Australians never have ceded sovereignty over their country, and that these always will be, or they always are and always will be, Aboriginal lands. Okay, thanks. So welcome everyone again, like I said, to our webinar series on managing your financial well-being. The Southern Cross Postgraduate Association is very proud to bring this to you. It's an exciting new webinar series. The Southern Cross Postgraduate Association is managed by postgraduate students who wish to help other postgraduate students to succeed. This webinar series is funded through your SAF, your Student Services and Amenities fees. Anyway, we're so lucky to have Liz Mclarty design and deliver this webinar series. For those of you who weren't here last week, just to remind you who Liz is a wonderful lecturer at Southern Cross University in our business degree programs. She's worked extensively with small businesses, supporting them to design and achieve their financial goals and strategies. And Liz is now working towards, I think, maybe very close to completion of her formal training towards her accreditation as a personal financial counsellor. Just so you know, if any of you feel like you need individual financial counselling from an expert financial counsellor, we've retained the services of Liz to also provide that. And if you feel like you need that, then please just contact me through the helpline at scpa.net.au and we'll put you in contact. Just a little bit of housekeeping, and the main thing is, look, there are some workbooks associated with this. If you haven't received a workbook, can you please just add that to the chat function and I will email you pronto. So having said all that, Liz, thank you for joining us. Take it away.
Lovely. Thanks, Craig. And thanks again, Jody, for organising, setting up all of the technical parts of these webinars. So it's a lot of great work. Thank you very much. And welcome, everybody. It's so nice to see there's a lot of familiar names. So we haven't had a lot of face shares, but I can see familiar names and little icons there, which is lovely. If you feel comfortable, please feel free to open up and so we can all see each other if you're in a situation which is allowing so. But it's so nice to see so many of you coming back and returning to these workshops. So I'm just going to share my screen with you all and get started on our next stage of, let me just do this to come up. Hopefully that's all looking good for everyone. Everyone's feeling good about this, except I need to just change the display setting here.
Yeah, I can see it. It's good.
You can see it? Yeah, I just need to bring it out of the presenter mode. There we go. Are we into this? And it will just take a second. Looks like it's freezing. Did everybody lose me for a second there? Did it kind of freeze?
No, you're good.
We're all good?
Yes,
so good.
I think, yeah.
Okay, good. So what I try to do now, I'm just moving things around so I can see faces and names, and I can also see the chat. So just, I guess, some of those housekeeping things as well during the session. We've got an hour together. So welcome to my office. It's so nice to have you all here. We've got about an hour, and usually what I try to do is in 45 minutes, I'll be going through some of the content for this week's material, and then we'll have about 15 minutes available to us to do Q&A. And in that space, we'll stop the recording. So if there are somewhat personal things you want to discuss, it's obviously up to you and how comfortable you are, what you would like to discuss. But of course, if you do have particular personalized things you have questions about, as Craig mentioned, that you can book in for a session with me, and we can talk through whatever the particular circumstances are that you're facing at the moment. We can work through those. As you're all coming into the session tonight, we were having a little bit of a chat about how, I guess, the whole idea of these financial wellbeing series and these sessions, and these are really the first, our trial of how we would go about putting out some really great resources to you all. And I guess it kind of just to give context to this sort of 3-part series, when I was putting it together, my thought was, I know that there's so many of you here that have such great experience and skills, quite diverse across different faculties and subject areas. So I know also that you may be at different stages of your financial life cycle as well, so different stages there. And it's really important for me to, obviously, as an entry point into the topic, try and provide you with some really practical resources that you can all use and that are really relevant at whatever stage you're at. So these are really fundamental resources, which I'm obviously also drawing upon my experience as a certified practicing accountant, that I'd have 14 years of working within businesses, budgeting and planning. But these tools which you have access to in those worksheets are really the foundations for businesses and for people who are managing their finances personally. They're really the core tools that can help you to have information available to you. So when you are making financial decisions, you're taking that information obviously on board and being able to make decisions within your own context. So I'm fully aware that there's obviously a lot of different resources out there, lots of different budgeting software, apps. Your banks will have different things available to them. And of course, it's really up to you to find what suits you. My preference for when I'm doing my client work is really to encourage and build financial capability within my clients, so they develop their own tools as opposed to relying on and using a tool that often has another agenda as well, and we've got to be really aware of that. So that's my preference for using Excel. Obviously, that's where a lot of my career I was using that tool, but I'm sure that many of you are familiar with it too. So the worksheets that we have and we're working through, I'm hoping that they're going to be really helpful, but I'm also really aware that you might want to do things slightly differently, and that's okay as well. But I'm hoping that you get the core of what we're trying to achieve with them. As I'm moving through the session today, I also wanted to just recognise, I had this slide up last week as well, really capturing, I guess, the essence of a lot of what the students are doing across the institution, which is just amazing. And also to really, for us to recognise that many of you are coming from lots of different backgrounds. And like I said last week, it's really important that we draw upon those strengths and recognise those within ourselves when we're starting and looking at our financial journey. Often people can feel like they're not very capable financially. A lot of reasons for those. Some of the primary ones are that, you haven't really been given any financial literacy education along your education journey. It's usually quite rare that that happens. Most of it happens in a household. You might learn bits and pieces, but it's not something that's talked about. But in saying that, you've got a lot of skills and experience that when I'm working with people one-on-one, I really draw upon those, and people can really see that they can bring that into their relationship with money as well. So you're not sort of carrying, often people might carry, if you're somebody who maybe didn't feel particularly good mathematically at school, they might have a voice of a teacher in their mind saying you're not very good at maths, and then they bring that with them to their relationship with money. So there's a whole lot of things like that we often talk through when I'm doing consultations with people as well. But I wanted to recognize that we've got a great lot of people, and obviously those listening back to these recordings as well, a lot of great skills and experience. And it would be lovely throughout the session if you do have any reflection points or things that perhaps you've come across that you feel would be also helpful and relate to what we're talking about. Please feel free to raise your hand or interrupt me and add a comment to the message bar. That would be amazing. I also wanted to acknowledge that after the session last week, it was wonderful that Stefan, who's here tonight as well, I can't see all of the attendees in one go for some reason when I'm like this, it's amazing. He's actually doing his PhD, and I've written it down so I don't get it wrong. So he's doing his PhD thesis on psychological and behavioural barriers to financial wellbeing and financial advice seeking, which is amazing. And we've had a bit of a chat and would love to put together something for a future webinar as well together, which we can present, looking at some of the latest research and some of what he's come across as well. So if I'm sure that many of you also have additional things that resources that you might know of, please feel free to share those as well amongst you. This is really about sharing that learning, and for me it's about financial capability, enabling you to be feeling capable financially, in control and confident, and we can certainly help each other do that, sharing any resources that or as we go through the material, there might be things as well that come up. Just watching the chat there as well. Thank you, Badika, as well for your comments as well. It was lovely working with you in your sessions, and nice to have that feedback. So yeah, thank you for that. So before I sort of set off and look at the topic that we've got for this week, it would be lovely to sort of check in with everybody who was here last week to get an idea of how you felt about the session, not just the session, but how did you go, I guess, taking that next step after what we walked through? Were you able to go away and complete the worksheets? Were there anything that you found particularly helpful, or any challenges that you came across? So last week, what we looked at was really getting an understanding and being able to understand where we are financially. So what is our financial position? Because it's really important to know exactly where you are before you start to plan and make changes or create goals, which we're going to look at today. So in the financial wellbeing worksheets, the Excel file, we worked through last week the 3 different tabs. So firstly, how to create your own personal balance sheet. So you have a great understanding of knowing exactly where you are. What do I own and what do I owe? And then working through to the next tab, we looked at also thinking about some of the more, I guess, what I call the inner resources that you have as well. So what are some of your strengths and skills that you have that you think could be helpful when you're building up your financial capability? Also giving yourself a little bit of a space and opportunity to think about, what are some of my habits and behaviors that I have around money as well? Some of the positives, but some are also the more challenging behaviors. So you can identify what are some of the things that opportunities, areas that you might want to change. Because often we think we go into finance and we think we just go straight into the numbers and we don't create a space to recognize the emotions. But it's often, as Stefan's probably finding out too in his thesis, is it's really a lot of those psychological and behavioral elements which can be the things that prevent us from having a really being able to enjoy and experience financial well-being. So it's important to have some way to capture how we're feeling about our financial life as well. So this workbook is really is kind of create, for me, this is what I use as well personally. So I've got one place where I capture everything and I can track whatever the goals are that I set for myself. I can check in, do a quarterly balance sheet, see how much the net worth has gone up or down, whatever my goal was. So it's really, really helpful. I'm hoping that many of you will find it helpful too. And then the last part of that worksheet and getting an understanding of your position was about creating your own personal income statement too. So knowing where your money's coming from and where it has been going to. And the whole idea was to get a sense of reflection of, and really with an aim to increase your awareness of where you are financially. Which is really important, because often we hear so much around financial issues and topics. We often jump to making decisions or changing things or comparing ourselves to somebody else. But it's so important to really understand yourself and your own financial situation first before you start to make any changes or improvements. So did anybody have any comments about that worksheet? Did they have an opportunity to work through it? Anybody want to share any of that before we move on into the session? Yes, great. Okay, so I'm just reading some of the comments here too. So thanks, Sharon. Great to hear that you did work through the worksheets, and it's wonderful that you were able to. Like I said last week, some people, depending on what your exposure has been to Excel or some of the emotional barriers, some people find it a difficult thing to do, which is also obviously okay. But it's great to hear that you've been able to do it, and you're starting to recognize that obviously money is not just about the money. But when we raise our awareness about what's currently happening with our money, we can start to understand some of those financial and psychological impacts. Great, and I'm just looking at Rebecca's comments too. Okay, great. So it sounds like what it helped you do as well, you can start to see that you've got some tendencies that you have that you're acknowledging and starting to sort of, it allows you to gain visibility and awareness of some of the things that you do with your money, and some of those which you would like to change as well, which is exactly what we're going to be looking at tonight. So that's wonderful. Okay, great, Durga. So that's and it's really good as well. And when we start to look at, so this, when we're actually a good time for me to move on to looking at what we're going to do today. So again, just setting up and giving context to this sort of 3 series webinar that we've put together. So to begin with, as I said, we get a clear understanding of where we are. Then today we actually want to start talking about what is it that you want to change. So where is it that you want to be? And we'll talk a little bit about timeframes associated with that. But essentially what we'll be doing is setting financial goals, and what is it that makes a good financial goal and how important they are, and making sure that they're really personal to you as well. And then when we get to next week's seminar, we're going to look at, well, how we're going to get there and what are some of our options. So where you're looking at, well, sort of what are some of my ways to increase my income? We can look at how you might do that. What are some of the options? And I'm not here to give you those answers, but really to enable you to work through and problem solve, and to really support and enable you. I can direct you to, things that you might consider, things that you might research. But again, we can certainly look through, and that's also another topic for a future webinar as well, is certainly around investments and different ways of creating income outside of a job, face-to-face kind of in-person job. So I hope that sounds clear for everyone tonight. So our main focus and goal for tonight is really to look at, well, how do we set financial goals? And also, I gave you these worksheets, you filled them out, which is fabulous. And I'm sorry, I'm just looking at the chat at the same time. But then you might be starting to think, okay, but where do I start? So I've got an idea of what what I owe and own. I've got a sense of some of my emotions around money, and I've also got, now I know what's been coming in and going out, but what do I prioritize? So we'll have a chat about that as well. Just reading, Duke, thank you for your comments about the previous workshop. Okay, great. So you're asking about what the difference between income and expenses are, and also cash flow management. So I think what you're asking here is, so in that last spreadsheet worksheet, which I've got, I've just lost this now. You've got, what we talked about was income, so what your income and expenses were over the past 12 months. So essentially what we wanted you to do is look back and say, okay, given my past 12 months, where was all the income coming in from? And you might have got a sense of how regular that was as well. Was it predictable? Was it casual? Was it irregular? You get a bit of an appreciation for that. And was it more than my expenses? So that was really the key thing there, is to get a feel for, am I spending more than I earn? That's one of the key takeaways that you'll identify. But you'll also start to be able to zoom in on and look at, well, what are some of the key things that I spend a lot of money on, and do I want to change that as well? And it allows you to have that information right in front of you that you can see, based on the last 12 months of me living my life, this is what I've spent my money on, and is it what I want to continue spending my money on? And that allows you to ask that question. It helps you in terms of cash flow management, because what you'll do is, what we can then do after having worked out what your yearly income and expenses were, you can actually pull those back and look at when are some of those. So obviously not everything is paid regularly. You might have electricity, which was paid quarterly. You might have some expenses that are weekly. So what the next step really is from there is working out a cash flow management system to make sure that you're able to meet those expense demands. And we haven't captured that in this system yet. And that's really something that is probably, hopefully, one of the goals that you might come up with, is that you want to have a system that allows you to manage your cash flow effectively, so you're not relying on my credit card, and that you might, build up an emergency fund so that you don't then need a credit card if there are extreme things that come up. And creating a cash flow management system for yourself is really important, and that information is certainly going to inform what that system is going to be like. Does that help answer your question?
Thank you, Liz. Yes, indeed. But one more thing, I was aware that income statement and cash flow come in separate statements for business. So I just wonder how I can apply that for my personal finance.
Yes. Yeah, you're absolutely right. So, and definitely drawing upon business studies and what businesses do, they absolutely have a cash flow. And when I'm teaching budgeting and in management accounting, you definitely have your income statement, and you have a cash budget as well. And your cash budget is literally telling you when is the cash coming in and out of the business. And you can also do that personally. And that's something that I can definitely help you with. We could have have a one-on-one session about that, or we can definitely look at it in a future webinar as well. I can note that down as a topic on its own. So essentially what you would be doing is creating from that income statement, you'll be creating a separate spreadsheet that is purely reflecting when is the cash coming in and out of your accounts. So we can definitely look at that, because it is a different statement.
Thank you, Liz.
No worries. Thank you. Great question.
I have a question just in regards to your cash flow management plan. Is there, like, I know everyone's circumstances will be different, obviously, depending on their financial goals, but I'm just wondering, is there like a generic kind of guideline that you should, like, people could be advised to follow just to sort of cover all bases? Because I think for me personally, I didn't exactly have the best examples in my household growing up about how to manage money, and school didn't really teach me anything. Yeah. So I'm kind of went off a bit of common sense, but then I think I kind of also fell into a bit of like, I don't know how to manage money. I wouldn't even know what's the smartest thing I should be doing with my money, apart from maybe just having an emergency fund. Because I know everyone kind of has like a different approach with that sort of stuff, but I'm just wondering, is there a system that is kind of like there for people to follow, or you could advise on that would, I guess, essentially cover yourself in what you should be doing to manage your money, so you're not left you know, in hard circumstances, if like something happens, or yeah, it's just like,
Yeah.
how do you manage your money basically? Like what's a smart way of putting
No,
your money where your
absolutely.
mouth is?
No,
That makes
that's
sense.
great. No, it's a great question and really relevant to so many people. And I completely understand where you're coming from, and most people will be able to relate to it exactly. So I won't go into this. So I guess the short answer is there are a lot of different ways that you can, and again, I think it's relating to Duke's question around cash flow management. And there are a number of different approaches that you can take, and it is in terms of looking at, obviously, when you're just basically looking at it when you do your income statement, or you've got, which was that third tab in the worksheet, you're going to identify, firstly, am I spending more than I earn? If that's the case, that's going to be a priority for you to need to change that. But then what you need to look at is look at the timing of your expenses, and also identify those expenses that are fixed and that are non-negotiable. And you need to make sure that you have enough money to cover those. So it might be, there's a lot of people do things differently, but you know, if you've got some of those expenses set up as a direct debit in a particular account, you need to be, if you're looking at, you know, month to month, you're wanting to plan ahead and make sure that you've got the right amount of money. You'd be looking, okay, what's the next month? How much? And people most likely do it the regularity in which they receive their income. So if you're paid fortnightly, it's probably good to manage it at first fortnightly. But if you're paid monthly, you could do it monthly, because then essentially what you're doing is you're looking at, okay, this is the money that I've got coming in. What do I need to pay for in the next fortnight or the next month? But you've also got to keep an eye to then what is coming up. And that's why it's really important to take a whole 12 months view, because you'll also be able to see things like your rego, your electricity, all of those things that are not frequent, but they might be once a year. And then you need to know that you need to put money aside for those amounts. But yes, as you acknowledged, it's different for everyone. So depending on your circumstances, some people might already have a bit of pot of money, which is your emergency fund, which I really encourage. And we're going to talk about that tonight as well. Having an amount of money that you can draw upon to, I guess, you know, cover those, the ups and downs of, you know, where you might have a month that's more expensive and you might actually be spending more than you earn, but you're drawing down on your own funds as opposed to using a credit card. So I guess hopefully I'm not complicating that, but it's certainly something that I definitely work on with people one-to-one. And you can, looking at what you've got available, we'd set up a system, also taking into consideration how you spend and what you use to spend. So some people, if it comes to making sure that they stick to a budget for groceries, for example, they might use cash. They might actually take the cash out knowing that that's something that they overspend, and it's really easy. You're at the grocery store and you just spend, and instead of just swiping your card and, you know, missing how much that's adding up to, you say, right, I'm taking out, you know, 150 bucks. That's all I can spend on my groceries for this week. And you just make it work. And you know that if you stick to that, then the rest of your budget is all direct debits or, but again, it's up to working out the system for the individual. Does that help?
Yeah, that actually really helps a lot. Even just like what you said about, you know, groceries, because I tend to do that, what you explained just then. I'm like,
yes.
Yeah, I got a rough idea, but I never stick to it. And sometimes I don't even realize how much I've spent until I've come home and looked at my transactions, and then I'm thinking, oh my gosh, I don't think I needed all that food. But it's just, what you said about the cash thing, I think I might even just start doing that.
And that's one of those key things about getting back into control. Your credit cards and your debit cards, it's so easy to lose control because you're not going to add it up. And that's exactly where I was probably 10, 15 years ago. And then I completely changed the whole system. And it was because what I was looking at is looking backwards and looking back at decisions that I made. And I really wanted to be in control. So I said, okay, what are the things that discretionary kind of items, like it might be eating out, it might be clothing, entertainment, whatever it is for you. And again, this is personal, and you set up what are those budget amounts that these are the amounts that I can spend, given all of your other situation, what your income is, what your other fixed expenses are. you decide what those amounts are and then take them out in cash and then stick to them. Particularly helpful coming up to a busy festive season for people too, with presents and things like that. And you've just got to own and be responsible for those budget amounts that you set. And if you've got only so much, once you've done all of this understanding of where you are financially and what you can actually and I hate to use the word afford, because there's a lot of negativity around that, but it's about what you plan to spend on things, and that's up to you to decide, as opposed to getting carried away and spending hundreds of dollars on a gift because you really want to show the person how much you love them, that you know that you can only spend that amount, and you make it work. You find creative ways to make it work. And I've had a couple of student sessions too recently with and coming up with some really lovely ideas about how to make sure that that's working for them too, to enable them to reach their financial goals. So you've got to set yourself boundaries to your expenditure, not in a way to make yourself feel like you're stuck and you've only got so little, but it's actually giving your money a purpose. And because you've got a plan for it, you've got a future idea of what you're working towards. You might be saving for a house or a car or an investment property or whatever it might be for you particularly. You making those decisions and setting boundaries about your financial decisions is enabling those things, and that's really important. And it allows you to communicate that too to others. If they're doing something really expensive and that's just not fitting in with your plan, you can say, that's not fitting in with my money plan at the moment. I can do this, but I can't do that. So that's also helpful.
Thank you very much for that.
Lovely. Okay, good. So what I wanted to have a quick work through today is, so I guess reflecting on, I wanted to use the case that we had looked at last week. And I know it's really simplistic, but I'm still hoping it will prompt some reflection, because it's really difficult to talk about someone's personal situation that's here tonight. So we will use this as an example. And what I wanted to, so assuming that you've worked through these worksheets and you've set them up, what I want to do is just talk through the 3 of the sheets and think about what it might prompt you to think about in terms of creating a financial goal. So what would it be in terms of what you might want to change? What could you see in this situation? So if we take a minute to kind of imagine that this is our situation, and for those of you who had last week, probably, so it's not overly complicated. This person's just got a debit account, $560. They've got a high interest account, $500, a just in case fund or an emergency fund, $350 there, $2,000 in super. So that's kind of what they own. And then they have what they owe. They've just got 1 credit card and they've got their HEX debt balance. So just thinking about that, not even bringing in the next 2 tabs in the spreadsheet. Are there any thoughts or ideas here about what you think this person might want to do, or what kind of financial goal they might set for themselves if this was you?
I would say to pay off the HEX debt.
Yes.
I said, yeah, you want to pay your HEX debts.
Okay, good. So one of the things is you want to pay off your HEX debt. People are saying, so thank you, Michael, talking about just paying off debt in general. Increasing the emergency fund. Thanks, Stefan. Mia talking about credit card. Tim saying close the credit card. So good. So some really good ideas, and definitely they're all really important. But what the key thing is going to be for this person and for yourselves is to say, okay, what is my priority? So what am I going to do first? And this brings up an important topic, which some of you may have heard of, talked about this before, is what is good debt and what is bad debt. So if you were looking at here, we've just got 1 credit card and we've got HEX. Which debt would you prioritize? Lovely, lovely, lovely. Great. Good. So we definitely want to get rid of the credit card first, and that's what people will categorize as a bad debt, because it's expensive and it's unnecessary, and it's not going to enable you to create, build an asset for the future. So you certainly want to prioritize that credit card debt. If we had a number of credit cards there listed with different balances, what would be some of the thoughts around which one you would get rid of first? How would you prioritize if you've got a number of credit cards?
Would you just do like get rid of the small stuff first? Because I kind of would do it like that, but I could be wrong. Like, I don't know.
No, you're not wrong. So that's great. So that's one option. And this also comes down to a little bit of individual motivational theory and approach. There's obviously some options that are more financially sound than others, but it's also about being motivated to keep doing it. And that's really important too. So often it's about combining that knowledge and understanding of which is going to be financially more impactful, but taking into consideration your own motivation. So, and it's again, I work with you individually to come up with this. But yes, I think as everyone's saying, some people are talking about, working off. Some people will work out what is the lowest balance, and they know that they can, in terms of motivation, they can achieve that, get rid of that one first and get that momentum and feel satisfied that they've got rid of one credit card and then work towards the others. So it's a matter of prioritizing the smallest balance first. Others will also look at which is the most expensive. So which has the highest rate, and that's what's costing you the most. So you want to make sure that you can get rid of that one first, even if it's the biggest balance. So some people will do that. And then we've got the idea of also combining and consolidating them together. And that's a really important decision to work through. And you're really going to need to understand the complete holistic view of the charges that are involved. Doga, did you want to mention something there?
Yeah, I just wrote it in the chat bar anyway. I was just gonna say, I would do it comparing to the due time of the credit card, like which credit card first I have to pay, because that's more emergency. So yeah, I would go in that order.
Okay, good. So yes, of course, wanting to try and make sure that you're not going to incur any unnecessary late fees or more interest charges or anything like that. Absolutely. So there might be also make sure that you can pay off the minimum for all of your cards, but then work towards getting rid of at least one of them to really work that debt down. So yeah, that's absolutely really important. So credit card debt is certainly on my next slide, before I bring it up, I've got a couple of slides tonight that are things, they're really to prompt you to think about. So I didn't create the image, but it's really to kind of give you a summary also, and some things to think about. So, and as we're talking about debt, I think it's worth here thinking about this idea of what is good versus bad debt. So in this category, obviously, of bad debt is your credit cards, and also car loans or any consumer loans as well. So if we saw those in this person's first personal income balance sheet there, that they would be some of the priorities as well. And again, taking into consideration what is costing the person the most, because what you want to do is get rid of that debt and that unnecessary expense. Because once you do that, you're going to be able to free up capacity to start, channeling that money into something else. So really getting you into a more financially healthy position where you can either, build wealth, accumulate that wealth, find other ways to, many other options there, which we can look at as well. But yes, you're certainly going to want to make sure that you're prioritizing those components. In terms of our good debt, so we do see on this example that we do have the HEX debt, which is student loan, which is really categorized as a good debt. What is everybody's thoughts around their HEX debt? Are they going to try and pay it off early? What are some of the motivations, or where do you find information that's going to help you to make that decision?
I feel like my HEX debt is so massive that I wouldn't be paying it off. Like, I feel like I couldn't even pay it off in my lifetime, honestly.
Does anybody know what happens if you don't pay it off and you're at the end of your life and you still have a debt? Do you know whether you pass it on to, so imagining you've lived out your life and you still have it sitting there, are you going to pass that on to your children?
Can that happen?
Anybody know?
Can that pass to your estate if you have any asset or anything?
No, it doesn't. So all it does, so there's no real motivation to pay it off any more of it than you need to. So it's one of those debts that this is why it's important to get a full picture of where you are, so you can start to also understand and unpick where are the bits that are causing you stress, and for you to identify whether they should actually be causing you stress. So your HECS debt will sit there if you know, as soon as you're earning, and you go to the government website, and it will tell you that the tiers for which you're earning, the percentage that will come out of your salary, or that you'll pay at tax time. And then you won't, if when you pass away, you still have a debt, it won't be passed on to your children. So it gets cleared off. So that's your answer around that one.
Yeah, because it wouldn't be very fair. It's not like the kid went to university and,
No.
you know, got the education. So why should they pay for it?
Yes, yeah. So it's and really important. So and seek out. So it's, and as you're looking through your own personal balance sheet, you can identify things. And if you do see that there's something particular that you're sensing that you're getting stressed about, you know, note that down to then go and research and understand. Make sure that you're understanding the fullness. Even if you're looking at your credit card debt, make sure you're looking at all your credit cards, going, oh my goodness, I've got all these debts. What do I do? Then go, right, okay, I need to go and find out all the information about each of my credit cards, know how much they're costing me, what are all the fees, and then be able to work through it systematically and calmly. And then that's going to help you to make a good financial decision about how to get rid of it. So yeah, in addition to your student loan, obviously some people will have a mortgage if they've got a home and they're paying off their own personal home. They may also have business loans or investment property loans as well. So it's just getting a sense of, here we're talking about financial goal setting, but it's important to get a sense of what are the priorities that are going to help me to make really good financial decisions and improve my financial well-being. Craig, I'm just wondering what, sorry, I'm reading your question now, and it may be a bit, what was it in relation to the credit rating?
Well, yeah, thanks. Look, I was just wondering, with someone with a student debt, and, you know, I need to, you know, have a credit card or a debit card and stuff like that. I was just wondering how the student debt, if it's not paid, might hurt my credit rating.
So definitely when you're applying for credit, it is taken into consideration. So the debt is taken into consideration, but primarily for your abilities to pay whatever the amount of money is that you're asking to borrow. So it needs to be incorporated into that calculation, because they'll, whoever the lender is will know that if you've got a HECS debt, and they'll look at how much you're earning, they'll know that you'll be, part of your income will be going to paying off that HECS debt, and it allows them to see what your viability is in terms of being able to manage it.
So does that even include then a mortgage repayment? If the borrowing capacity to get a mortgage,
yes,
that would be affected too, because if it's going to affect that, then
yeah,
I don't see why it wouldn't. Yeah.
So it affects your borrowing capacity, which is a really reasonable thing if you think about it. So if you and the HECS is the amount that you're going to pay off. You can go to the government website. It will tell you what percentage it is depending on your salary level, and it will just increase depending on how much you earn. So you can work out what that is, and it's important because it is an expense, and it must be taken into consideration for you then to be able to ensure that you can keep up with your mortgage repayments as well. So it's really about responsible lending as well, to make sure that that's being taken into consideration. You don't get charged interest on your HECS debt, but it is indexed. It's indexed, which means it increases by CPI, or it's actually quite a small amount. I don't know the exact amount at this given point in time, but it's indexed. So it's not interest, and it's not compounding. It's just indexed each year. And this is really good. And I think one of my options for topics in the future too is debt, your HEX debt. And what might be worth doing, just keeping an eye on our time for the session tonight, is we could do a session solely on HEX and really pull apart and answer all the questions about it as well, and some scenarios that people might be facing. So I can make sure that I'm giving you some really good resources there. Okay, good. So once you've had a look at your personal balance sheet, you'll get some ideas of what are some of the things that you want to change. So we've talked about obviously paying off credit card, then working on some of your other bad debts, working down your car loan, consumer loans, personal loans, whatever they may be. It's also really important when you're looking at that as well to look at what you do owe. What you own, and the idea of building up an emergency fund as well. Often when people are caught in a credit card cycle, it's important to actually build up a bit of an emergency fund so you can escape that cycle, as opposed to, sometimes it can be challenging if you've got your credit cards and you keep paying it up and then something comes up and then it increases again. It feels like you can't get out of it. So although the credit card is really important to prioritize, it's also important to make sure that you're building up an emergency fund as well to prevent yourself, to get yourself out of that credit card debt as well. But again, that's something that I would work with you individually to see what your situation is. Great, Stefan. Thank you for your question too. And I think I've got a slide about emergency funds. There's a lot of different rules of thumb and general ideas and tips. It does depend on your personal situation and what your risk level is like, what your work dependability and reliability is like as well. Because essentially what you're looking at in terms of building up an emergency fund, how I like to think about it is if I lost my job, how quickly would I be able to get another job, or at least replace my income? And you want to give yourself a buffer, so you know that if that happens, or if other things happen in your life, that you can still maintain your life and your lifestyle and not be, thrown into a whole lot of stress. So for some people it can be 3 months, and definitely if you're single, you don't have dependents that you're looking after, 3 months can certainly be a good amount. Certainly moving into that sort of middle age of financial life and cycle, they often say between 3 and 6 months is a good, and particularly what we've just gone through and experienced, people losing jobs and a lot of changes. If you're somebody who worries about that, building it up to being around 3 to 6 months is a good idea. And then if you're later in your career and you're quite close to retirement and getting to retirement, the recommendation is often to have even more than that. So even having at least a year, and in retirement to have 2 years worth of expenses available to you in a savings account. So that's kind of the life cycle recommendations of what those emergency funds should be. But again, what's really important is, and what I'm really trying to promote and encourage, is that that personal reflection and thought, not just ticking off thinking, okay, someone's told me that 3 months is a good idea. It's you thinking about that yourself, because this has got to give you security and make you feel in control and confident about your financial decisions. So it's really for you to sort of sit with and decide what is it that you're most comfortable with. And certainly if you haven't got an emergency fund to begin with, it does take a little while to build up, but that's okay. It's just important that you're chipping away and you're creating that emergency fund, and you've got it there. It creates such peace of mind and allows you to respond and adapt to changes so much more calmly and seamlessly. So really important. Okay, so I'm thinking we're going to go over time. We'll try and keep going. So in the second tab that you would have filled out in the worksheets, you've identified obviously some of your emotions around money, some of your behaviors, habits, and also experiences that you might draw upon as some of those positive things as well. So thinking about that, and hopefully if you haven't completed this, that you will go away and do it. What are some of the things that you might identify having done this that you might want to then set as a financial goal? Exploring that. I think Rebecca was sharing some of her, I guess, history or experience of learning about money was really at the home, and maybe some of that was not all positive. So maybe some of those experiences and some of those behaviors that you might have, really you feel like that you've adopted from that situation. It's kind of identifying some of those behaviors and habits, the ones that you're proud of. Obviously, you want to keep reinforcing those and be really positive at celebrating those. And then looking at what are some of the strategies to help you change some of the habits as well that you might have that aren't actually helping you achieve financial well-being. Anybody want to share anything there about the emotional or behavioural side of their financial relationship?
I think just for me, like I said, like before with being okay, hold
little
on.
one.
Sorry. Yeah, just in the house, like my household where I grew up, it was sort of like if my family ever came into a situation where they had no money or something happened, they would really just deal with it as it came. There was no planning involved, and I have very much taken that on. So that's something I definitely want to change by planning and setting boundaries with my finances. So that's something that I would like to address.
Fabulous. And that's a brilliant goal. And just even having it, and what we're going to do next week is, once if you've set some of these goals, thinking about, well, how is it that I achieve those? And some of your how will be hopefully working through these worksheets and setting up some of and structuring it and having it a bit of plan, having forethought, thinking it through, and having some of the systems to also support yourself to achieve those goals as well. So that's a really great goal as well, to recognize that some of these and it's some of those unconscious behaviors that we all I guess absorb from what we've watched and what we've seen happen, and being aware of them is really the first most powerful step, which I'm hoping that these workshops are really helping you to increase. And then it's looking at, well, what can I do about it? So that's fabulous. Yeah, so great ideas. Right, I'm going to just keep going, just keeping an eye on this one. Yep. So the next, I guess in our next spreadsheet, when we're looking at what are our income and expenses, obviously here in this situation, what's the big thing that you would be seeing for this person? So we've obviously got about 18,200 coming in the last 12 months. We haven't got the full side of this, but we can see that definitely the net of it is minus 12,000, so almost $13,000 there. So what would be one of the key things you would be looking at if this was you?
Where the money's going to.
Lovely, thanks, Sharon. Yes, absolutely. So that's one of the key things you would want to look at, and hopefully in that exploration, the motivation for it is clearly that you need to adjust what you're spending. And what's nice here is in this sheet is we're really seeing we've got two levers. So Doga, you were talking about wanting to increase your income, so that's one option here. Exploring some of those options around how can I increase my income, and then how can I reduce my expenses? They're really the two things that are at play here. But the overall goal that someone could have in this situation is that they want to make sure that they don't spend more than they earn. And I want to say again, I know I keep pounding on about the personalization of this, because there are a lot of general tips, and I'm going to bring them up in a minute. What are some of the generally accepted tips that help you in terms of increasing your financial well-being, some of the actions that you can take? But I want to be really clear that they are general, and you've got to take your own situation into consideration and what you're doing. It's just like a business. There can be a startup business, and in that first year they're going to spend more than they earn, and that is part of where they are, but they've got a longer term plan and they know what's going on. So we're just looking at one snapshot here of figures. We don't know the person, we don't know the situation or what's going on, and that's why it's really important that you're connecting with the person and understanding. But clearly, if you're looking at this and you're wanting to increase, you could imagine that this could be causing a bit of stress if you're in this situation that you're obviously, and there's no other reason for you being in this scenario, other than, you know, someone could potentially, this could be somebody who's studying and perhaps they've saved up money knowing that they're actually not going to be able to earn that much, and they know that they're going to make a loss each year, but they've actually saved up the money and they're drawing down on that, and they've made a bit of a plan for that. That could be a scenario if that's what they've chosen. So it's not necessarily all bad. So that's why we need to think it through. But yes, certainly, you know, you would want to be looking at, yes, I want to reduce my expenses. I want to make sure that I'm not making that loss outside of that situation. And the how, so once you've made this decision about what it is, and maybe it's, you look at that and you say, hold on, I don't want to be, you know, at a loss of $13,000 a year. I actually want to be saving $10,000 a year, because I need to do that to build up. So in 5 years' time, I've got X amount of money, and, you know, adding that to my savings, I'll be able to then buy a house or whatever it might be. So then you can, next week, we'll look at, well, how do we do that? So if you want to actually turn this around to being $10,000 profit, well, what are my options? So you'd start looking at, you know, individually, what are the expenses? What can I change about how I'm living? What can I look at in terms of my income? So you're really taking control of it, because you've got this whole view of what's going on. Okay. So I keep pressing this wrong bar in the chat. So just bringing in again, just a couple of things to sort of consider. And this was, I know we're going to go over time, so I'll quickly go through some of this just to give you some ideas. And it's more really just that, things to consider, points of reflection, but making sure that you're obviously intertwining it with your own personal stuff. This is just a report that's exploring financial well-being in the Australian context, and it just gives us some dimensions and ideas about what is financial well-being and what is it that you're aiming for, or what are the things that help somebody to feel confident and capable and feel financially well. So one of them is obviously, you know, meeting expenses and having some money left over. And they've got some subdivisions here. So being able to meet your expenses, manage your debt, have a savings buffer, which is your emergency, and then to able to afford little extras as they come along. The next dimension is about being in control. So having control over your financial situation, and pursuing goals for the future. So hopefully these worksheets are going to help enable you to do some of that as well. And it's giving you back some of that control by seeing how, where you are exactly, and what are some of the things that you can do and change to give yourself that control back, and create some of these, you know, emergency funds. Make sure that you are putting money aside. And thinking through, what is it that I want to experience? What is financial well-being to me? What is my end goals as well? What are the things that I want to experience in life? So yeah, some of the things there to think about. I also, as I mentioned, so these are just some of the sort of, like, I guess, commonly accepted kind of draws upon those as well. You know, general things that could help and improve your financial well-being. Obviously, living within your means, eliminate your high interest, you know, bad debt first, build up an emergency fund. And we talked a little bit about how much that fund would be. And also knowing, you know, what you value, needs versus wants. That's going to really be activated when you start to look at, well, how am I going to achieve some of my goals as we go through next week? You know, Sharon, you were talking about looking at some of those expenses, and it starts to get you to think about, well, what am I spending my money on? Do I really get value out of that? Is that what I need, or is it just what I want? And you can start to categorize them and give priority to particular things, obviously with your own personal situation in mind, who you are, what you enjoy in life, not thinking about what everybody else is doing, and comparing yourself. We want meaningful comparisons. And obviously, yeah, having a budget that helps you to manage your cash flow is a big one as well, which we've had a little bit of a chat about tonight, but certainly need a session dedicated to cash flow management techniques and ideas as well. I think that would be great. And just really going through, I guess, the last bits and pieces when you are setting your financial goals. I'm sure you've all come across SMART goals before and you're like, I know what they are. So they're just making sure that when you do set goals for yourself, that it's really important that it's just like if you were wanting to get healthier physically, You're not just going to say, oh, I'm just going to lose 5 kilos. Yeah, they'll be right. You need to really think about what is it that specifically do I need and do I want to experience? So, you know, if you're wanting to save an extra $100 a week, you know, how often are you going to do that? When are you going to start doing that? Or it might be about achieving a goal in 12 months' time. Do I want to have a savings amount, a particular car you want to purchase? Be really specific about it, and make sure that's achievable as well. So there'll be a little bit of an interplay. Once you set your goal, you'll then look at, well, how am I going to do that? And you might need to go back and modify your goal once you've done what we're going to look at next week in terms of looking at the options of how you can achieve it. So yeah, make sure you've got that SMART acronym in your mind when you're setting your financial goals as well. So don't make them too sloppy, make them really specific. They'll keep you motivated. And so you can also track your progress, really important as well. This again was just a prompt, you know, conversation and thoughts around, you know, people at different ages and stages. But again, everyone's so different, and they can be helpful for you to reflect on. But definitely not to get boxed into like, this is what I should be doing at this age, or this is what I should be doing. It's really just giving us a really broad guidelines, just really about, you know, personal finance in general, about what people's orientation or focus is at these different times in their life. So really important. Obviously, at first you're saving, then you have most likely going to have some debt. As your, you know, income is increasing, but it can change. You know, people can be doing all sorts of things. You might want to stop and your income might drop back because you want to do something different. You want to do volunteer work as well. So these can be helpful, and it's important that I know when people go out to research things, there is so many resources out there, but I would really just encourage you to yes, definitely increase your knowledge base, but always reflect back on what is it that I want to do. It's all well and good for someone to set these sort of ideas and boundaries, but what is it? What does this mean for me personally in what I want to achieve? So you'll be able to look at these when they come up. We can probably upload the slides as well, maybe as a resource that people can have a look at. But it was really, I just wanted to add some additional resources to prompt people to think about. So yes, have a look through those. And it's really bringing us to, this was the kind of where have I got to? In the worksheets, you have a financial priorities tab. So really bringing together one space for you to structure all of this thinking about your financial well-being, to add in what your financial priorities are based on what we did last week. So for example, you might have, you know, increase your emergency fund to equal 1 month's worth of living expenses, and, you know, achieving that by the end of next year. And then it's looking at, well, is that even possible? What is that amount? You know, understanding what that is. And yeah, as I said, next week we're going to look at, well, what are some of the things that we can do? It's the how of creating these financial goals that we've set for ourselves. So I really encourage you to go away and, if you haven't already, complete the worksheets and to work on some of what you think is your priorities for the next year, coming to the end of this year, and it gives you a good start for 2022 as well. But it's certainly something I can work with you all individually on as well. So that kind of brings us to the end. I know we haven't then got much time for Q&A, although we've been doing a little bit of questions as we go. So I hope that's been really helpful. And I can see, Craig, you're on.
Well, I was about to suggest, look, I think, you know, there are many people who are very happy to have you around, you know, so we can do the Q&A as long as you like.
Yeah, is everyone good with that? I actually have a client session at 7 o'clock, which is in half an hour time, so I can't stay forever, but I can stay for a couple more minutes. So we can.
Well, okay. Well,
yeah.
I think we can have a few quick questions if anyone. You know, look, you know, I think everyone's really interested in what you're saying. A few quick question and answers.